What's up, guys? It's Ray J back with another video. And in this one, I want to break down what's happening with Tesla SPY in the overall market. But just note that I am not a financial planner, so make sure you take nothing I say as financial advice. And also, if you guys can, please check out my Weeble link. If you deposit any amount of money, you're guaranteed 12 of free stocks. If you deposit $500 or more, you're guaranteed 20. And deposit $2,000 or more, you're guaranteed 40. The offer ends very soon in just about 12 hours. Anyways, now let's talk about what's happening with Tesla. So right now, Tesla's selling off at the broader markets. We ended up losing this 255 support. I said in my morning video we might see a little bit of a pop, and we're going to be looking for a big dip. I called out 255 instead of this fails us. We're looking for potentially a move back down to 253. Eventually, 250 would be our target. And lo and behold, Tesla just touched the 250 area. So we did end up coming down to our target. So the question is, what's going to affect the market from here? What's the news saying about Tesla? We have some good and bad news that came out. So let's first talk about this. Inflationary numbers were all as expected. However, the earnings have basically trumped that exactly as I predicted yesterday. I did give you guys a warning about this, about how the market had potential downside coming. And now I just want to say that we have unemployment numbers coming out for tomorrow. So that's going to be the next big factor alongside big tech earnings. So we'll be watching all of those just to see if they continue to add fuel to the fire of this sell off or if they cause the market to bounce. So I want to make that very, very clear. Whether we get a bounce or a bigger dip depends on these other factors. Now, as far as Tesla goes, there is some news right here about how Polestar EVs are now able to use the Tesla supercharger network. This is quite bullish news as it's going to give Tesla a lot more exposure. It's going to give them a lot more revenue. And I think that's great news just to see more and more of them adopting their connectors. However, just know one thing about that Tesla's going to have a lot of demand for their supercharger networks. We're going to need a lot of expansions. There's going to be a lot of demand for it. So we'll have to see how Tesla offsets the big increase in that. Can we see a bigger supply of these supercharger networks across the US? But nonetheless, it's still bullish news in my personal opinion. There's also this news right over here about how Ford is offering its own Tesla supercharger adapter to EV customers after what ended up happening. They had a different view about Tesla's adapters, saying that they're not as efficient in their personal opinion. So they have their own version that could be used, which they believe is going to be very useful. And they think that it's going to be sold separately. So they're selling it at about like $225 to $230. And it's going to be complementary with the NACS port. So that's something that's worth noting. They have different ideas, different opinions about the Tesla charger, but nonetheless, they're still technically going to be able to be used at Tesla supercharger stations, but it's just that they're using their own adapters. So that's something else that's worth noting. What do I see for the charts from this point on? Honestly, guys, look at resistance at 253 and main support at 250. The market's very heavy, so I don't expect us to see a big bounce yet, and there is a risk of us continuing to fall to 250. If we lose 250, we're looking for 248 and then 245 as our targets. But so far, Tesla is remaining more bearish. It could continue this downtrend, but just know that 250 tends to be a stronger support for Tesla. It's a very important psychological level. So as you can tell, that's where Tesla's holding for now. So we'll see if this holds or not. It is a very, very important support, but there is a risk of more downside nonetheless. As far as SPY goes, we're rejecting it. We're on a bit of a downtrend. We have this resistance to watch for at 572, and currently our support is right over here around 570. So I'm looking at this 570 area right over here as our main support. If that were to fail us, just hypothetically, we technically have a gap to fill, and we have our next gap support right here at 568. That's going to be my next target if this ends up failing us. And then below that, we have 566. So basically, in levels of two, it's just for these next couple of supports. We have 570, 568.5 ish, and 566 as our support zones. For resistance, watch 572.6. If we get back above the 573 zone, we're looking for 575 as our target. But as of right now, the market's very heavy after the big tech sell off, and we remain more bearish. Whether we see a bigger dump, if we start falling to like the mid 560s or below that or not, is going to be determined by the next big tech earnings, not to mention what happens with our unemployment numbers tomorrow. So we'll see how things go. But for now, just know the market's very heavy. There are some bars trying to defend 570, but the market's very heavy. It's not that easy, so I don't expect it to get a big bounce. We might see a little bit of a shuffle near that area, but the downside risks are still there. As far as Nvidia goes, I called out 135. That was my target to fill this gap. We actually dipped below that. So we're basically looking at this support right here, 133, very close to the 133 area, which is where we had previous supports. It's very close to that zone. If that were to fail us, we're looking for the next demand zone down here to 131. So make sure you watch these levels. Very close to 133 is one support. Then we have 131, and we have 135 as resistance on Nvidia. So watch these levels very carefully. It does look more bearish. It is dipping quite a bit. Could be retesting 132.5 and the lower 130s if that fails us. So it still looks more bearish to me. As far as ES goes, we're more bearish. We've lost our critical support at 5,800. So this is a bad sign for the bulls now. And the bears have a bigger edge. So I do believe that if we lose 57.50, our target comes all the way down here towards the 57.25 area. So I'll be watching this very carefully just to see if we end up dipping back down to these levels. So we're looking at supports around 57, basically right over here around 57.50. If that fails us, we're going to be dipping closer to about 57.25. We have resistance up here around 57.80, but this is still favoring downside a little bit more. For other tickers, we have NQ. NQ looks more bearish. We're looking at 20,000 as our support to see if that holds or not. If it does hold, we have 20,200 as our resistance. And if it does not hold, we're looking for basically 19,800. But we still look more bearish, in my opinion. So we'll have to see if this leads to a reaction or not. For the QQQ, we look more bearish. We're looking for basically 485-ish as our support. So if this is where we had this bottom right over here, if we try to rebound off this, I'm basically looking at 488 as our resistance. So watch 488 over there, followed by 490. And if 485 fails us, we're looking for a dip back down all the way down towards 483. So there could be a much bigger dip. But I think that there are buyers defending 485 for the time being. And to see a bigger move, it depends on our data coming out tomorrow. So I'll be watching for that very carefully. As far as Aapl goes, we lost support at 230. So I was talking about 228 as our target. We ended up dipping below that to the next support I had marked at 227. So watch 227, 226 as our supports, and 228 as resistance. But this still looks a little bit more bearish. Buyers are trying to hold where this wick was right over here at 227, but nonetheless, the bears have a bigger edge. For the IWM Russell 2000, we have 219 is our support. We came down to fill this gap. We have 220 is resistance. There is risk of this coming down to the 217 area. So I do believe there is more downside risk. We could attempt to rebound into the 219.5 area before it continues lower. So just be just be mindful of that. Coinbase is dumping 10% after earnings, unfortunately. We're looking to see if 190 flat holds us. Just know it's still bearish. Amazon's dumping after Microsoft had its announcements as well, with a slowdown in its cloud revenue. So I think the line got deleted right here. We have this zone right over here is going to be our resistance, 188, and the main support's in the 186 area. I marked that. We came very close to that. So we're looking at 186 as our main support and 188 as our resistance. We could dip below that, so just be mindful of that. Meta tried to rebound only to reject. I did talk about that in my morning video. So there is a risk of us coming closer to about 570. Microsoft is continuing to dump. We're now down to 5.8%. I was talking about 412 and 410 as my targets. Those even failed us. So now we're dipping all the way down to like 405. The low 400s could be coming if we lose 406. So if like this support right here fails us, I could be looking for basically an attempt to get back down towards 402. So unfortunately, Microsoft looks more bearish. Google is flat right now, but there is a risk of rejecting a little bit more to get back down to 175 or lower. So that could end up getting a dip. So as far as the market goes, we look more bearish. This is slowing Tesla down. We're looking at this resistance around 253, and we'll have to see how things end up going. So with that being said, thank you all so much for listening. I'll be back in a couple of hours from other updates. Until then, have a great day and peace out.